Hi, everybody. This is Gary Dean with Sentiment Timing, and this is our free weekly video report for Wednesday, June 7th, 2017. So the markets have been kind of going up and down, not really going anywhere. They've been a little boring, but things are going to change, and they're going to change. Sooner than some may be anticipating, especially a lot of the Elliott Wave say sites that I like to look over. I see them get they're going to be leading a lot of their followers into a very very dark hole, and they're not going to know what went wrong. But that's the problem with say Elliott Wave and other just type of regular technical analysis tools is that they're really really good after something has taken place because you have your wave structures or whatever it is where it could be pointing to the moon and there's not going to be any pullbacks or anything like that, but then all of a sudden we get this massive drop, and all they do is just restructure their wave count to make it fit, and then it goes from there. But if you follow them, you find yourself 400 or 500 points on the S&P behind the eight ball. So I there's some really really interesting things coming on. I had a great conversation with Woody today, and with that, let's get started. So the basis of sentiment timing is we guide our members through time, and that's when the trend is scheduled to reverse, and that's through Woody Dorsey's technical timing indicators, sentiment, and he is one of the only ones in the world that actually tracks sentiment, but he does it on a daily basis, and that's the why, because you're going to get sentiment extremes. Both at tops and bottoms, and that's just the way things work. And patterns set up off of these sentiment readings, and Woody's been studying the market for over 40 years, knows what they look like, and it's going to be something that I'm going to be going over tonight. And then we use technicals to figure out where they're going to they're going to reverse. And don't get me wrong, this is we're not a magic eight ball. We get everything right. Absolutely not. Some things the market's going to do what it's going to do. We adjust, but it's most of the time it's not going to change the overall dynamics of what's going on. It may delay it for a little bit, but it's not something that if there's an important turn that is coming and it misses it, it doesn't mean you have to get bearish on the market or you have to get bullish on the market. It just means that it missed that particular, technical timing indicator, the date, and you move on from there. You know when you're going to be wrong, and that's it. So, one of the things that the technical timing indicators that Woody does, they're right. I'm gonna say close to 90% of the time, but there, like I said, there's gonna be times that are wrong. We just went through one where we were looking for weakness right after Memorial Day weekend, and obviously the market had something else in mind, and it's headed higher, but it doesn't change the overall dynamics of what's coming, and that's going to be really really important to understand. So going through this is just what the report that we put out yesterday, and what he is saying is that the good news, the new highs, the high sentiment, it's a typical of a golden halo formation. So I've gotten a lot of emails like, oh, the golden halo, it didn't work, and that's not true. It's never been set to have a massive decline yet. We are supposed to get choppy, and we are going to get choppy, but from there, that is when the golden halo formation forms. So if you don't know what it is, I'd appreciate not sending an email saying it doesn't work, especially if you're not a subscriber, because you don't really understand what's going on. But in any case, the formation is in play right now, and we're in what he's called a twilight zone, and it means that it's in a topping process. It's very mature, which is very important to understand, and it's very strange. So yeah, we were expecting a some type of hiccup or pullback coming in towards right after Memorial Day, and it didn't happen. So it was never scheduled to be the big drop, but it was supposed to be some weakness, and the market had something else in mind, and kept going on. But the golden halo formation is still in play, and I'm going to show you why it's important. But one of the things that some of our subscribers have been sending us is that it's frustrating waiting for this to play out. And he had mentioned that it was a great trader that he knew that shared one of the most difficult things he had to learn was waiting for the completion of a price pattern, and it was always difficult. And that's pretty much it. You don't get frustrated with if something doesn't go exactly your way. I mean, if that's the case, you're looking at a really micro version of the market, and that's not going to end well for anybody. So we have there's the golden halo, it's forming, and he repeats there's going to be better negativity indicators in, and this is where the important dates are, because this is where we're expecting the big drop. So the Trump top will result in important decline. That had nothing has changed, even though that one particular date that we were looking for right after Memorial Day didn't work, and that's it. So what am I showing you here? This is the Dow back in 1987. Why am I showing you this? Because Woody, in a conversation that we had today, had said that he remembers that that this golden halo formation that he created, and it was back in 1987, and he was getting the same type of responses where people really weren't believing the market was going to go down. And this is on a weekly basis. And if you looked, it really never did go down. And we had a little, drop, and it bounced back up. And then in a 3 week time period, it dropped over 37%. So this is the pattern that he's looking for. Is it going to drop 37% in 3 weeks? No, we're not going to be saying that. Could it? Maybe, but it's not. That's not really what we're saying is going to happen. But I mean, we haven't even had a 20% correction. But in any case, this is what is setting up and why it's really important. And I can tell by some of the emails that we get where okay, you guys are maybe you'll be right here and there. Woody's been right more times than he's been wrong with particular calls on turn dates. So the pattern that I'm showing you here with this, the big drop back in 1987, and the reason why it's ringing a bell is because just the wave structure that I'm following is once this last leg completes here, which we are in, like what he said, the later stages of this. This is going to be setting up for what I'm looking at from a technical basis as a wave four down. And wave fours typically go to previous wave fours, and that's all the way down at 1800. So if you just take a look at where things are, and if you measure it from there to here, it actually is not that far off on where things could go. And if you remember what happened after this quick drop, the S&P, I mean the Dow ended up going up and making new all-time highs, and that's what this pattern is looking for. So you don't have to be in every little micro move. You just need to be in these moves that move 100 150 points on the S&P, sometimes maybe 2 or 300 points or 400. You don't have to be in every one of those. You have to just be in one or two to make your year. So this is the pattern that we're waiting for right now. And I can tell you right now, a lot of the wave structure, say services out there, I mean, they're looking at 3, 4,000 before they're even looking at a pullback, and that's why I'm saying they're going to be leading their members into a black hole. So here's the golden halo formation here, where we have, you can see sentiment that's been at extreme bullish sentiment. Nobody believed the market's going to go down, and we're walking right into into a time period that a lot of people may have never seen in their lifetime. So the market really did nothing today, but it's always telling you something. So here's the total money flow in block trades, and look who's at the top of selling rallies, the institutions. So there's always something being told in this market, and even with it only being up, a few points today, institutions are selling, and I've been seeing that often where any kind of up days we're seeing massive selling from institutions. So from behind the scenes, it's things aren't as rosy as the say financial stations are trying to tell you that they are. So finally, this is going back on May 9th, and he was looking, this is just to show you how these timing indicators work. So the generic trading high was on 510 and 515. Now this is going on May 9th, and it actually came out a little bit earlier than that, but this is the one I'm showing you. And you can see on the 10th we had a drop, and on the 15th we had a drop. So this is, these are these timing indicators where, yeah, the one we were looking for a high to come here, and this is just an older chart, but obviously it didn't, and it went higher. But it's going to be right more than it's wrong, and that's really the main point that I've been trying to make to everybody. So here you can see on the 15-minute chart of the S&P, we broke through this trend line right here, came back up. If I just kind of zoom in, you can see we back tested it. It would make perfect sense if we headed down, because especially we have the bearish divergences in play. But if they head higher, so be it. The dynamics aren't changing. You just keep an eye on the 2440 and then up at the 2444. Those are your pivots, and from there it's going to really exaggerate the bearish divergences that are placed even on the 60-minute chart here. And this is that wedge that I'm showing you. So the first thing that the bears really need to do to get some momentum going is get it through this support line at 2417, 2425 area, and that's pretty much where we came today, and that's where we got the bounce. If they lose that, if the bulls lose that, then you're going to see a quick drop down to the 2403, 2396. This is where the line in the sand is for the bulls. If it comes down and they lose that, then we're going to see a panic move down to the 2352, or possibly all the way down to that 2320 area. So we have some reasons to see maybe that the all good news that's been coming out. Maybe a chance for some hiccups. I know we have Comey talking tomorrow. The news is going to try to twist that into something where they're going to be trying to impeach President Trump. And on top of that, we have the Fed next week. So we have a lot of things that are going on right now that we're going to be anticipating some volatility. So there's important dates that are coming. The next date is actually a low date that we're looking for. And it's probably going to be a pretty good buying opportunity. But there's the big important date that we're going to be looking for is when this golden halo formation is going to play out. So what we're doing, you'll see it on the email there, but we're confident that this is going to be happening in a particular time period, and we're actually offering a money back guarantee on this. So if you're interested in finding out these dates and doing it with really no liability to things, because if it doesn't work, then you'll get your money back. But it's going to happen within the time period that we're saying. We're going to say that the S&P has to drop 100 points. During that time, if you get some spider puts or something like that, and the S&P drops 100 points, you're going to make a fortune. So you're going to end up staying with us, and it's not going to be we're not really going to have to worry about it. And since we're pretty confident on this date, the dates, that time period that it's going to happen, we're going to offer a money back guarantee. But what we're doing, we're making you lock in for 6 months, and it's an extremely discounted price, where it's $4.99 for 6 months. So that's going to take you into the end of the year. That's a little less than $75 a month if you work it out. And by the time that when you get the dates that we're looking for, this big golden halo formation to complete in the drop, if it doesn't happen within 30 days of that, and the S&P doesn't drop 100 points, then you can ask for your money back, and we'll give it back, no questions asked. So we're only doing that for 15 people. This is something we just kind of thought of, and if you're interested, take advantage of it, because like I said, I get a lot of emails from people saying that coupon codes aren't working. That's because they got filled up. So once this is filled, it's done. If you're interested, click on that email, the link there, and book your spot, because it's going to be going fast. So with that, until next week, have a great night and good luck trading.